This is the Equity Management Academy Mean Reversion Trading Weekly Podcast for October 25th, 2021. Gold is about to skyrocket. Summary. Technology has created a completely virtual economy. This transformation has brought about many changes in the system. It has transformed the monetary system with the creation of Bitcoin, a virtual currency in a new and unpredictable digital world. The underlying momentum supporting this surge in interest rates in a digital currency is the fact that our old physical currency, the US dollar, is collapsing against gold and other real assets. Fundamentals. This transformation has brought about many changes in the system. Technology has created a completely virtual economy. It has transformed the monetary system with the creation of Bitcoin, a virtual currency in a new and unpredictable digital world. Blockchain technology is the foundation for the creation of decentralized digital assets such as Bitcoin and other cryptocurrencies. The underlying momentum supporting this surge in interest in digital currency is the fact that our old physical fiat currency, the US dollar, is collapsing against gold and other real assets. This collapse was brought about by the pandemic in March 2020 when we transitioned to a digital economy. Gold shot up $600 and reached more than $2,000 an ounce. The stock market has more than doubled, and real estate is in a state of euphoria. Crude oil prices are reaching $90 a barrel after hitting a negative $37 a barrel in March 2020. The CPI indicates that commodity prices are exploding. Federal Reserve Board Governor Lael Brainard on Monday laid out a strong case for the central bank to maintain low interest rates, saying that the spike seen in inflation this year was transitory and the labor market was far from being healed. September 27, 2021. According to Federal Reserve Chairman Powell, all of this inflationary pressure is transitory, but it feels more like a pressure cooker releasing all the pent-up inflation we have exported to the world since President Nixon took the dollar off the gold standard in 1971. U.S. debt has exploded to close to $30 trillion and counting, and the U.S. dollar has declined more than 98% against the U.S. dollar reserve currency. For commodities through 2020 was not all bad. In August, gold topped $2,000 an ounce for the first time ever, increasing by 16.8% in US dollar terms as low interest rates made the previous metal a more appealing haven than treasuries, even outperforming many prominent asset classes in the process. Gold can act as an insurance policy against monetary devaluation, especially if the dollar weakens. Dollar weakness has traditionally led to gold prices rising with a globally led devaluation of fiat currencies. More so than ever, we anticipate higher gold prices. Silver is another precious metal that has witnessed significant gains over the last year, touching the $30 an ounce mark in early August, a price point it hadn't achieved in more than 5 years. However, what makes silver an underrated investment opportunity is its place in various industrial applications, especially since a number of products and chemical processes make use of this metal. And such application is in solar panels, one with the Biden-Harris administration. We can anticipate a more aggressive approach to the reduction of fossil fuels. With its fundamentals, one wonders why gold is not at $50,000 an ounce, similar to Bitcoin's price. The world knows that gold is a centralized monetary asset. It is and will always be the other side of fiat currency. It has been proven asset. It has been a proven asset for thousands of years, especially when economies enter an inflationary or hyperinflationary cycle. The big difference between then and now is that we have Bitcoin, which was created by the demand for a decentralized asset that would offer the same protection as gold against imploding currencies like the US dollar. The advances in acceleration in technology today are unprecedented. We are transforming our physical world into a digital world. With blockchain technology as the foundation, the future promises exciting opportunities. Gold is about to explode. The gold market has been completely ignored the past 12 months. We have gone into a second corrective wave that is about to revert and begin the third leg of a long-term bull market that started in March 2020. The fact that gold is ignored may be one of the most bullish signs from a historic perspective. When gold unleashes its reversion to the mean, it will be a spectacular move, and most people will miss it. The collective sentiment on gold is the most bearish in the face of the most bullish fundamentals ever. The economics of price alone are a screaming buy signal when you compare it to other financial assets, digital or non-digital. I believe that gold and silver are setting up for a historic move during historic times, said Equity Management CEO Patrick MontesDeOca. Mean reversion trading. We use our proprietary AI algorithm, the Variable Changing Price Momentum Indicator VCPMI, to technically analyze the markets. According to the VCPMI and our robo-advisor, Nikki the Robot, the weekly trend momentum of 1781 is bullish. The weekly price momentum of 1790 is bullish. This is the velocity of price in relation to the bigger trend. Exit longs at the sell 1 and 2 levels of 1819 to 1845. Exit shorts at the buy 1 and 2 levels of 1764 and 1734. The VCPMI identifies the extreme levels above and below the mean when the market is most likely to revert back to the mean. Entering trades at the buy 1 and sell levels, the extreme levels away from the mean, offer the highest probability trades. There is a 90% probability from the sell and buy 1 levels and a 95% from the sell and buy 2 levels. That the market will revert from those levels back to the mean. Thank you for listening. If you want to learn more about what we do, please go to the Equity Management Academy, ema2trade.com, or listen to any of our previous episodes.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our Variable Changing Price Momentum Indicator, VCPMI, is an automated AI trading system developed and tested over a decade. The VCPMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VCPMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VCPMI algorithm. The VCPMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VCPMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VCPMI? The VCPMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VCPMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VCPMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit ema2trade.com for more details.